Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range. And if we look over the last 4 sessions, we can see that the market has been in a very balanced state. It has been range bound between initial support and initial resistance. So our short-term directional bias heading into the open today is neutral, and our larger time frame bias continues to be bullish. Now, with that short-term bias being neutral, it means that we are going to have to assess the situation in real time. In order to break out beyond initial resistance, we're going to have to see broad market strength and sustained upside momentum. And then on the downside, in order for the market to put in any kind of sustained breakdown below initial support, we'll have to see excess broad market weakness and sustained downside momentum. Absent any clear strength or weakness or any clear sustained momentum in either direction, the market can continue to balance within this range between initial support and initial resistance, and that means we need to be careful initiating new trades in the middle of the range. The only time it would make sense to initiate a trade in the middle of the range is if we were seeing very clear-cut signs that one side is clearly dominant on the day time frame. Otherwise, the market can chop within a range, and you don't want to get involved at poor trade location within that chop. And then the better idea is going to be to focus on getting good trade location. So for the long setups, it would be waiting for the market to provide a pullback into support. And then on the upside, if we're not seeing any decent momentum as the market tests initial resistance and we're not seeing that broad market strength, then a short setup can be considered at initial resistance, keeping in mind that the market is stuck within this balance. Now, in the event that we start seeing bullish signs in real time, we can still give more edge to the buyers simply because the larger time frame bias is bullish, and any upward price movement would be in alignment with that larger time frame bullish bias. And then beyond the initial resistance zone, there is no hard resistance. So 37.75 to 39.75 marks the all-time high, and in the event that the market does break to the upside, we have to understand that there is no hard resistance, but based on the range expectation, the market could get exhausted by 45.5 to 47.5, and especially by 51.25 to 53.25. On the downside, in the event of a breakdown below initial support, as long as the breakdown is happening on some decent downside momentum and broad market weakness, then there is potential for ES to go down and tag 21.5 and test 17.25 to 19.25. Now, given the larger time frame bullish bias, responsive buyers can be active at 17.25 to 19.25, and then in the event that we're seeing extreme weakness below 17.25, we have some strong support at 10.25 to 12.25 and 12.75 to 13.5, and that's a very high probability area for responsive buyers to be active on first test. So the main thing that we're going to have to assess off the open is if we are seeing any signals in real time that are pointing to directionality. Are we seeing sustained upside momentum, broad market strength that can lead to an upside breakout, or are we seeing some excess weakness and downside momentum that can lead to a breakdown? If we're not seeing either of those conditions, then the market can continue to balance between initial support and initial resistance. But if one of those conditions are present in real time, then we have to be open to a directional move. So again, heading into the open, our short-term bias is neutral, and that means that we are open to the market moving in either direction, and we are going to have to assess the situation in real time. And that also means that we are open to the long or short side today, depending on how the day develops. So those are the main thoughts heading into the open. Let's see how ES responds to 26.25 to 28.25. That's going to help us establish our intraday bias, and we'll take it from there.